Hello traders, welcome to my YouTube channel once again. My name is Andre. Thank you for being here. I hope you had a nice trading week. Not over yet. And for that reason I want to share my views for these last 2 days of the week. And I want to share my views with you regarding those, or supported by those advanced pattern formations that I tend to search for inside the market. So some of you are already familiar with my work here, and well, I hope you enjoyed my insights. My objective is to get you synced with the trading process. It's not to offer you an opportunity to trade, but to offer you, or to share with you at least, a trading strategy that you can obviously improve and develop and change accordingly to your own personality and criterias and money management. So that being said, I want to share with you some of my views inside the market. Some will work, some will not work, some of those patterns will complete, others will not complete. But at least we know where those patterns will complete, where they will form, and we know how to take advantage from those eventual price behaviors. So let's start with the cable, and I want to share with you just a few previous price behaviors that we took advantage from, starting with this bullish shark pattern printed at 224% Fibonacci extension right below the price, nailing that fib, and then later forming kind of a double bottom and rejecting that Fibonacci level, which has forced the price to rally or to trade higher from there and to bounce. We have also the previous trend line resistance. So this was a trend line as a resistance pressure element. The market has decided to violate that structure, to violate that momentum, and it has started to move sideways once broken above, and we have now a well supported structure, trend line support, supporting this previous low. So obviously that suggests a breakout of this momentum, of this trend line support, suggests more bearish momentum for the cable. We never know if that will happen. We have also a lower time frame event there at the trend line, which is offering also an opportunity to go long with the cable, if that is your objective, to try to search for an opportunity to buy this market. I believe this is one of those opportunities. So you need to go into a lower time frame, kind of a 4 hours time frame, 2 hours time frame, 1 hour, to actually to plot and to follow this pattern. So this is the bullish Gartley pattern printed at 127% Fibonacci extension. As always, I like to consider the 141 extension. Recently, the most recent patterns have been pushed to that Fibonacci extension. So the Gartley pattern now, well, rejecting these levels may trigger more upside momentum for the cable. We have default targets for this specific pattern. So every time I find a specific pattern, in this case we found a Gartley pattern, we have a default targets for that pattern, which allow us also to identify our limits. So let's use just as an example 127% Fibonacci. So this is your reward, your first target. Obviously that may be maximized if the price decides to trade the second target, but we always consider the first target as our initial well, this is our first target, and we can use that range to manage or to identify our limits also. So this is basically a one-to-one risk-reward approach, and that's how I'm trading it at this point, because I need to respect this previous weekly support. So I have my stops positioned right below that support. If the market breaks below this trend line, I believe the market will fail. I believe that pattern will fail, and it will trade lower. But we need to make some assumptions. So if the pattern is printed, we need to manage to calculate our reward. In this case, we use a 38% Fibonacci retracement as our first target, which allows us also to identify our limits. So we never enter the market to lose more than what I expect to win. And that being said, I created a scenario or a motive to participate with my limits and with my targets above. Obviously, this can be maximized if the price decides to trade even higher above our second target. But initially, this is how I manage my positions. Obviously, not always with a one-to-one risk-reward approach. I tend to search for a friendly risk-reward opportunity. I tend to search for at least 1-2 risk-reward approach, where I will lose, let's say, $1 to win $2. And that being said, so this is cable now threatening the most recent trend line support. And let's move on to the next one. The next one is euro versus dollar. And we have a few other bullish patterns here, forcing the price to bounce. But let's get focused on these most recent price action and price events for euro versus dollar. So we had this bearish shark pattern also, a 224% Fibonacci extension, the price nailing that Fibonacci, a new fractal support, a new fractal resistance above. So this was our fractal, daily and weekly fractal. And again, as we can see, the Gartley pattern printed a 227 extension for euro versus dollar. As we can see, the market has been pushed a few points below the completion point, threatening the 141% Fibonacci extension, as I said before. And we are now positioned inside this kind of, I will draw this as a parallel structure. So we are now trading inside this range. So instead, well, at least for now, we need to wait and to see, because the market has already achieved our first target. So that allows us to break even our position and to start to partitioning our initial position size. We can start to split our position at this point and break even your trade. If the market then decides to rally to the golden fib in our second target, we will try to trail that position above the golden fib. So what I'm saying is, we break even at 38% Fibonacci retracement, and if the market decides to trade above the golden fib and keep trading higher, I will activate a trailing or a dynamic trailing stop, which will follow that price momentum and automatically, and will protect my position automatically also with my stops following that momentum. So at this point, obviously, breaking below this trend line support will trigger or may trigger more bearish momentum for euro versus dollar. At least this is what I see at this point. Obviously, fractals below, we are now threatening the daily fractal support. It was this fractal support here. And well, let's see how the market will react from there. There's also a possibility to achieve our second target. So let's say this is our first swing high. We have a second one already printed. So let's see if the market will follow into a third wave with new highs, and if that happens, we will see, eventually we will see the market trading very close to the 50% Fibonacci retracement, and eventually a second target will be reached. So obviously, assumptions: breaking below the trend line will suggest the retest of the previous low and the previous structure support fractal at 110.85, and obviously breaking below that level will eventually force a retest or a reinforcement of this ascending trend line as potential support also. And I don't need to say, obviously, breaking below that trend line eventually it will trigger even more downside momentum for euro versus dollar. And that's not what I'm expecting it for now, at least. I need to stay loyal to the pattern that we have. But we need to take those levels in consideration. So breaking those structure support levels, eventually the market will be forced to search for supports below. So this is what I have for euro versus dollar for now. Now we have Aussie, a very interesting price action for Aussie. Actually, I'm trading these since this bottom, these lows. Actually, this golden fib here, not this below. So I saw the price trading above this major trend line. Let me change into a daily time frame chart. We saw the price breaking above this trend line resistance here, and once the price pushes below, I was searching for the golden fib to trigger one eventual bullish momentum. As you can see, the market has respected the golden Fibonacci at 61.8% Fibonacci retracement, and multiple times, and I tried a position with this Fibonacci level here, which has offered me a nice run, with exits very close to this completion point for this crab pattern. So I started to project this pattern from below. So as soon as I saw the price breaking above this trend line resistance, I saw the possibility to form that pattern above. So the market did not complete the pattern exactly at the price that I wanted to, but we get the picture. So we have a rally approaching the golden Fibonacci extensions, the completion point at the 168 extension there at that brown fib, reinforced by a daily and weekly fractal resistance, and the market has decided to sink from there. So at this point we are now threatening the 200 moving average, and I can see the development of one eventual heads and shoulders formation. So for that to happen, for that pattern to trigger, we need the price breaking below this structured daily fractal support, this most recent support, that may trigger the pattern. Obviously, we always expect a pullback retesting the next zone or retesting the supports as a resistance at that time, and that may trigger our shorts. Once a retest rejects this support level, once we start to see the rejection of that support level, but we need to see a retest of that level first. We don't engage the market just because the market trades below the support. In fact, we wait for the retest of that fractal support level to trigger our positions if the market starts to reject that level. So this is my vision for Australian dollar versus dollar. So then we have New Zealand also in a very interesting situation here, because we have multiple patterns, multiple advanced patterns completed above, between this bearish bat pattern forged at 88% Fibonacci retracement. I don't have that fib here, I don't know why, but I can draw it again. 88% Fibonacci, that is the completion point for the bat pattern. 88% Fib right there, and a few points above the 224% Fibonacci extension from this very last swing low. So that completes also a nice sequence for a potential shark pattern. As you can see, the market has almost nailed that level. It has started to fall. Default target for the pattern, 38% Fib. We are now threatening the most recent support level. The previous daily support was printed there. So I will not be surprised to see the Kiwi eventually searching for these 200 daily moving average, and eventually it will find some pressure once it touches that Fibonacci, moving average. We have also the 38% Fibonacci as a minimum expectation for that pattern, the 50% and the golden Fib as a second target, or a second and a third target if you want, if you wish. Between those Fibonacci retracement levels, we never know if the price will actually trade those levels. We know where the pattern gets completed. We never know for sure if the market will react well and react in our favor from those levels. But we, again, a game of assumptions. We assume when something gets completed, we assume the price will react accordingly. But sometimes the market will not react accordingly, and it will fail. I will not be surprised to see a bounce from this support level without touching targets, but I still loyal to the pattern. I remain calm and waiting for that potential target to be reached on the Kiwi. Another one, Australian dollar versus New Zealand. I tried to go long from this completion point, a few points below. Actually, I'm not sure, one of those candles I tried to go short, but the market has retested and reinforced this trend line resistance there, and it has fall below and actually triggering my stop loss, and then after that the market has started to bounce. So we have a nice structure there. We are now threatening again this trend line resistance, and we are threatening the daily fractal resistance, also positioned above. So I will not be surprised to see a recover of that resistance, actually the breakout of that resistance, and the market trading higher from there. We have also the 38% Fib adjusted to those levels. So I will not be surprised to see Australian dollar versus the New Zealand trading back to the 38% Fib. But for now, this is what we have. We have also the possibility to form a 168 extension. We will try to search for that Fibonacci reversal, golden Fibonacci reversal extension. That's the correct name, and something between the 161 to 224% Fib. This will complete another great sequence eventual for Australian dollar versus the New Zealand. So this is the default shark pattern at 168 extension. The pattern can extend and trade above at 224% Fib. As always, I like to plot those two different levels. If the market decides to fail the 168 extension, eventually it will trade even higher, retesting this previous structure support eventually. And we can search also for confluence between the golden Fibonacci retracement. So let's say we have divergence between the 224% Fib, the golden Fib, and the previous structure support levels now as potential resistance. So if that happens, that will complete the bearish shark pattern, which may offer a nice pullback from those levels. Obviously, that can happen also from the golden Fibonacci extension at 168 extension. Two different price levels, one 105.59 and 106.53. So this is the range that I will pay attention if the market decides to trade higher from these levels. Move on to dollar versus CHF, another one that was and it's still trading below this major trend line. Let me try to show you this. So this is a trend, eventual trend line. It was reinforced there a third time, but the market has decided to break below. So we're still trading below this structure, which may trigger more bearish momentum for CHF. But I never ignore the possibility for a bounce below the trend line support. And that being said, at this point, I was plotting this eventual bullish sharp pattern at 224% fib. The market has reacted well, but it has failed to achieve the default and minimum expectation at 38% fib. We are now threatening the most recent support levels and the monthly fractal support actually with kind of a double bottom. So that's not impossible to form a double bottom and then to rally above. For that to happen, we need the breakout of this previous structural resistance that will trigger the double bottom. Until there, this is nothing more than a retest of the bottom and eventually more bearish momentum for CHF. Just because we have a pattern there, it doesn't mean the market will react in our favor. That being said, eventual double bottom for CHF. If that fails, we will have for sure more bearish momentum, and it will fail the pattern for sure. This is CAD, the Canadian dollar. I was also checking this one and waiting for the possibility to go long between the 113% fib and the 169 extension. Let me put that fib here. Actually, we have that Fibonacci already there at 128.65. So when I saw the price breaking below that 113% fib and the bullish alt-bat pattern completion point, when I saw the market starting to push lower, I started to project this eventual crab pattern extended at 169 extension. So as soon as I started to project that pattern, the price started to react, recovering this previous structure support line. As you can see, as soon as the market recovers above that trend line, the market starts to consolidate and moving sideways above the weekly support. So this was this fractal. This was a fractal support. In this case, it was a weekly fractal support, and we have the monthly fractal support right below. So after a new support, a daily fractal support, we have the recovery of the monthly and the weekly support for the Canadian dollar. And as we can see, the market is already trading the 38% fib from these lows. So at this point, everything can happen. We can see the market trading lower. We can see the market trading higher from there. We never know. What we know for now is we have broken structure, and we're still threatening. Let's say we're still threatening that most recent price structure and trend line resistance. If the price holds above these fractals, specifically above these trend lines now as a potential support, and the weekly fractal support, we may see more bullish momentum for the Canadian dollar. That guides me into the oil market, and let me just take a shortcut to this crude oil. So crude oil is also nailing, or actually reinforcing or retesting this ascending trend line as a support. So what we can see here in a lower time frame event, in a 2 hours time frame, we can see the market has found some interesting support level at 224% fib. So this completes another bullish shark pattern at 224% Fib. The default expectation for that pattern is a 50% Fibonacci retracement as a first target. So we will see the market retesting that at that time, that daily resistance. It was positioned here. It was then later turned into a support level. So I will not be surprised to see a retest of this support zone now as potential resistance, obviously. For those who trade the breakout of the structure, I believe you will wait for the breakout of this trend line and eventually a breakout of the previous structure support level at 59.16. So, but take this in consideration. The default target for the shark pattern is the 50% Fib. I always take in consideration as a first target the 38% Fib. So that allows me to break even my trade, and that allows me also to identify my limits, again with a maximum of 1-to-1 risk reward approach. So this is, as you can see, we have this bullish shark pattern on crude oil, and if that happens, we may see the Canadian trading reversal. So with crude oil, let's see how it will develop. The one that is completed is the crude oil bullish shark pattern. The Canadian still, let's see how it will react from here. But if that happens, if the bulls takes the crude oil from there, we may see the price on Canadian dollar falling below those support levels, these previous structure support levels, these fractals. Or a long period moving sideways during that process. We can see Canadian dollar moving sideways and trying to consolidate, while at the same time we have the crude oil trying to recover some of the lost, some of the last losses, and that's it. So let's wait let's wait for those and how they will develop. Norwegian Krone, another at 113% Fibonacci extension. I was expecting a bounce from this major trend line support again. We have this support trend line holding these previous lows, and as soon as the market approaches that level, I started to try to identify potential bullish patterns to offer me a motive to participate. 113% Fib alt bat pattern printed at 8.82. The market has been pushed a few points below. Golden Fib retracement from these lows, so we are actually trading the golden Fib. The market has found some support. The golden Fib from these lows, from the lows from January 24th. And that being said, the market has started to react from there. Again, default target at 38% Fib. We are not there yet, and nothing assures us that the market will trade there. So we need to wait for that. A nice opportunity based on the price structure and the major structure and the advanced pattern formation, reinforcing that trend line, actually offering an interesting position to participate at least. The Mexican peso a little bit different now inside the descending wedge. We have two different levels here for the Mexican peso. One of them right below the recent price, 1868, 113% Fib. So this will complete the alt bat pattern. By default, we will search for a retracement back to the 38% Fib as usual, and by default, the first target for the pattern. If that happens, if that fails, eventually we will see the price extending to the golden Fibonacci at actually at 18.0. So this is the 168 extension. If that pattern fails at 113% fib, we may see the price falling and extending to those levels. So this is also the bullish alt-bat pattern and the bullish extended crab pattern at 168 extension for Mexican peso. Then we have dollar versus yen, offering a very, very interesting position to go long at the bottom. So we have these, again, we have another, actually I plotted this ascending structure based on the highs of the structure. So I plotted these highs as a parallel structure, and the market has nailed that trend line as a potential support level with this crab pattern extended to the 168 extension, very similar to the one that I showed you right before this one for the Norwegian Krone or for the Mexican peso. The crab pattern extended to the 168 extension. So as soon as I saw that one, I triggered this position, and it has offered me a nice run, obviously trading above my second target already. We'll not be surprised to see a deeper pullback or at least a retracement based on the most recent momentum. So I will not be surprised to see at least a 38% fib retracement for dollar versus yen. We can also use the very first level, the very first Fibonacci level. Eventually the previous structure resistance now will act as potential support for dollar versus yen. At this point we have no clear pattern. Let me just try to measure something here. 224% fib, we are trading above that level. So we can consider this as well, it's a pressure level for sure, the 224% Fibonacci. As you can see, it was the completion point, and it is a completion point for this eventual, let me remove the magnet, for this eventual bearish sharp pattern. Actually, let me plot this from these lows, from these highs actually. So this is a bearish sharp pattern completion point, but it's now acting as a support level. So when that happens, eventually we will see dollar versus yen actually printing a new higher high above the most recent one before starting to fall. We can also see we have nice bullish divergence already, suggesting some eventual bounces from this level. Let's wait and see. We have a lot of room for that bullish hidden divergence to work. But we are now facing some interesting bullish hidden divergence for dollar versus yen. So I will not be surprised to see, as I said before, a bounce, new highs before the market starts to think on a deeper retracement. But again, recovering the weekly fractal, that may trigger more bearish momentum for dollar versus yen, and obviously recovering the monthly fractal resistance at 109.32. That will also that may also increase the probability for more downside momentum for dollar versus yen. The pattern that I want to share with you is that this the extended crab pattern at 168 extension, with the market nailing that fib, and it has a touch and run automatically. As soon as the market touches that level, it has found some pressure in that it has entered into a rally. Then euro versus yen, I'm not sure what we have here specifically. We have the 200% Fibonacci extension there. It's kind of a double bottom, a breakout of this trend line, a breakout of this structure resistance will trigger the pattern, as we can see, and the 200% Fibonacci extension achieved the default target for the double bottom, or the default projection above a broken neck for the double bottom being reached. 122.80, that was my projections for euro versus yen. The completion point for this alt bat pattern, we still trading inside that range, and we have default targets for that pattern at 38% fib. So I will not be surprised to see euro versus yen also finding some support at 38% fib, with the 200 moving average also approaching from below. So I will not be surprised to see the price sinking into those levels, and eventually a retest of that previous structure resistance, which may act as a potential support. And breakout of that support, obviously, or that resistance, which is now a support, will trigger eventually the reinforcement or a retest of these ascending trend lines as a support. So obviously, and again, breaking below that trend line support may trigger more bearish momentum. At this point, what we have is that that bearish alt bat pattern positioned and on hold at 122.80, so the market fails to complete the pattern. Nothing assures the market will actually print just a new high above the previous one, just to complete the pattern at 224% fib, and then the market will fail or will fall into these default targets above. And because it can fail from the 113, the reversal, we may see the price extending to the 168 extension. Again, if the bat pattern fails you extend it into a crab. So if the bat pattern fails you between the 88 and the 113% fib, we will see the market extending higher. And if that happens, we need to increase our time frame. I'm going to a 12 hours time frame. So if this pattern fails as a potential reversal, we will see eventually the retest or the reinforcement of this descending trend line resistance covering the previous highs, with patterns projected above. So we have the 168 extension at 123.94, so this will print the bearish extended crab pattern. And just a few points above, another alt bat pattern, but this one a major or a higher degree event, projected a few points above the lower degree alt bat pattern, the lower degree crab pattern actually. So this is what we have for euro versus yen. Let's wait and see how it will develop. The GBP, it has found nice resistance at 88% fib. It has retested the previous structure highs, 88%, 146.35. So this was the completion point. I was expecting the price to fall from there, but the market has failed, at least until now. It has failed for now the 38% Fibonacci retracement as a default target and a minimum expectation for the pattern. In the meanwhile, we can decrease our time frame. We can go into a lower time frame, and we have the eventual false breakout below this previous structure low. So we have a new lower low, and the price started to recover, and the full recovery above this structure resistance will may trigger more bullish momentum for the pair, and the levels that I will pay attention for between the 161 and the 224% fib, shark patterns on hold, previous structure highs, and a retest of the monthly fractal resistance above, with that shark pattern on hold right below it. We need to take in consideration that a breakout of these supports holding these lows, come on, a breakout of this trend line, eventually the market will reinforce that trend line another time, but breaking below that trend line eventually will trigger more bearish momentum for the GBP. Let's wait and see how the market will react from there. A nice moving sideways. Nothing interesting at least for now, and based on the time frame that we are searching for opportunities. Nothing specifically at this point. We just keep threatening these major trend line resistance broken above and recovered. So we're still trading around that trend line resistance. Actually, we are trading below that trend line resistance again. So let's wait and see how the market will develop. But trading above this previous structural resistance level, that will trigger more bullish momentum for the pair, and eventually the formation of those patterns above, or at least pay attention to those Fibonacci levels above. Below, we have targets for the major bearish pattern printed above, so we're still waiting for that possibility to achieve the default targets for the pattern. Australian dollar versus the yen. I saw these, and let me push this price here. At this point, when I saw this price action, and I started to plot this as a potential, let's call it an orthodox edge and shoulders, or a reversal edge and shoulders. Usually, those are not the shapes that we search for an inverted head and shoulders or a head and shoulders formation. But I was seeing these as a potential inverted head and shoulders. So, and the objective was, okay, if the market decides to break above this fractal resistance, the market will trade higher for sure. So the market has failed to pull back and to print this right shoulder, specifically as I started to imagine the price action from there. But I will not ignore this as a potential inverted edge and shoulders with the breakout above the resistance triggering more upside momentum. So this 200% Fibonacci extension, it was the default projection above the above the inverted head and shoulders. Obviously, we can see the market has failed to achieve that default expectation for the pattern. Below, as you can see, another market nailing the 1618 extension again. Bullish shark pattern printed at 1618 extension, triggering more upside momentum, or triggering upside momentum for the pair. The New Zealand versus the yen, another opportunity to go short was formed on a daily time frame. Let's go into a 12 hours time frame. The daily BAT pattern, this was the 88% fib. I was expecting the price to react from here. I need to adjust this trend line at this point. I need to adjust this trend line, something like this. Well, we have the price has reinforced that trend line with the fractal support there, the daily support. So when I start to project the BAT pattern at 88% fib, actually I can use my default Fibonacci retracement and the extension tool, which will project me the BAT, the alt BAT pattern, and the crab patterns. Well, between the 88% fib, the 113% Fibonacci extension, and then above the 1618 extension. So those are the three levels that I search for when I start to plot and I start to manage to measure the bat pattern, the alt bat pattern, and the extended crab pattern at 168 extension. So I use one single tool to plot all those levels. Daily bat pattern at 88% fib, the daily alt bat pattern at 113% fib, and above the bearish crab pattern at 168 extension. So let me delete again this red fib because I have already my levels there. So if you go into a lower time frame, and obviously the daily bat pattern has failed with the expected reaction from there. If you go into a lower time frame, we see different we have a different perspective here. So we have the reinforcement of the trend line with the daily support, kind of a false breakout below the previous lows and a rally above. So at that point I was expecting the 168 extension to act as a potential resistance. The market has failed that level just by a few points, or the 224% fib, again another bearish shark pattern completion point at 73.95. So this was what I was seeing at that point. What to say about New Zealand versus yen at this point? Nothing specifically for now. I still believe there's room for shorts, but again, just because the patterns are there, it doesn't mean that the market will react accordingly. We just make some assumptions again. So and we need to manage those assumptions limits. What I mean is, if we need to ask ourselves if it works to put our capital at risk accordingly to the environment that we are facing that specific market. So if somehow you think there's room to trade higher with the New Zealand versus yen for any other specific reason, eventually you need to avoid those shorts. I tend to take in consideration the pattern itself only, and if that works very well, if it fails very well indeed. So and we just need to move on and search for another opportunity. Special attention obviously for our limits and our risk for each one of those patterns and positions. But nothing more to say about the New Zealand versus yen. Let's move on to the CAD versus the yen and what we have here. So another ascending channel here. Let me show you the default chart. So this is a trend line support reinforced. We are now, let me increase my time frame, 12 hours time frame chart, 84. This was the completion point for the bearish, these brown lines here. Bearish shark pattern at 224% fib, 113% Fibonacci here, with the price respecting that fib and searching for the default target right next to the completion point. So the market has completed the pattern. It has found some support at the 38% fib, and from there new highs above the previous one. So at this point we have two options: a false breakout above this previous structure resistance, and if that confirms, we need to search for an eventual extension below those levels, so below this previous structure support, and this may print as another bullish shark pattern if that happens, if the market decides to sink from there, and if the market decides to break this trend line as potential ascending trend line support. If the market decides to break below, we will see how the market will react from the golden Fibonacci extension. But assuming this will act as a false breakout, until there we need proofs that will actually be the truth. So we need to wait for that to happen. If that happens in the breakout of this structure support, that we can start to project patterns below. Until there, we need to wait. Bearish crab pattern also projected at 84.97, right below the monthly fractal. So I will not be surprised to see a retest of that fractal above for the Canadian versus the yen. So let's wait and see. Then we have Euro versus Australian dollar, and for this one I need to go into a daily time frame. I believe we are facing a very interesting and eventual inverted edge and shoulders there, or a cup and handle formation. Usually that's not the position to search for, that's not the price zone to search for a cup and handle formation, but it's possible for the market to react accordingly to that same price behavior. So we can look left to the previous structure, and we can see similar events printed there. So I will not be surprised to see these potential inverted edge and shoulders searching for the default targets positioned above. So this is Euro versus Australian dollar, 166.63. Very close to the bat pattern completion point at 88% fib, and as always, and as I mentioned before, we can start to plot patterns above the starting point of the pattern if the market decides to break above. So 88% fib, bearish bat pattern, 113% fib, the alt bat pattern, and extended above the 168 extension, the crab pattern. So that's how I tend to search for those price levels: 88, 113, 168 extension. Basically, if the market fails the 88, the market tends to print a new higher high. So let's say a false breakout above these highs, the 113% fib, and then a fall. Or if the market fails those options, the market will trade even higher and eventually will offer you a nice range to trade between the 113 and the 168 extension. So that's our range above this completion point, the 113% Fibonacci. So let's wait and see what will trigger the pattern that we have at this point. Is a breakout above the weekly fractal resistance. So breaking above this fractal, that will suggest more upside momentum for Euro versus Australian dollar, and that will trigger this inverted edge and shoulders formation. So you need to wait for that to happen. Then we have also Euro versus GBP. Let me just check this time frame. Actually, let me hide all these draws here just to try to show you. Okay, daily time frame chart, 113% fib. When I saw the market pushing below, I started to project also another crab pattern at 168 extension. When I started to project that pattern below, the market has started to react around this 113% fib. So at this point we have the bullish alt-bat pattern offering support, and we have the default target for the pattern just a few points above. So that being said, I will not be surprised to see the market achieving the default target. We have also a trend line resistance now under pressure at this point, so we are threatening the breakout of this descending trend line resistance, which may also offer more upside momentum for euro versus the pound. I'm sorry. Now, euro versus the New Zealand. Another one that I think there's room to trade from higher from here, but without ignoring the very first pattern approaching at those highs. So let me try to. So Gartley pattern. This is just a projection. Nothing is granted. So just because we start to project a pattern, that doesn't mean that we want to buy the market. Just because I start to project patterns above, the market actually can fail those projections and start to fall immediately from those levels. Nothing is granted. Bearish Gartley pattern 169.35. So this will put the price retesting these broken ascending structure trend line supports. Again, let's go into a daily time frame. Okay, so we have this major trend line support holding those lows now under pressure. So with the Gartley pattern not nailing, but at least crossing that trend line support now as potential resistance. So if that happens, we may see the price pulling back a little bit from that completion point. If that fails, a full recovery above the trend line support, the ascending trend line support, if the market decides to recover that major structure, that may trigger more upside momentum for the pair. And if that happens, I will see what will happen around the 168 extension, 172.33. So this is the 168 extension and the bearish grab pattern completion point. That may also offer some, or at least we expect, or the pattern will suggest at least a retracement to the 38% fib. So I will not be surprised to see again the reinforcement of the ascending trend line support if that happens. So we will see how the market will react from there, or from the Gartley completion point at 169.35. Without completing those patterns, it is possible to see the price falling from these lows, falling from these highs, and eventually searching for the completion point for this major bullish sharp pattern just a few points below the weekly fractal, actually between the weekly and the monthly fractal support levels. Nothing is granted, as I said before. We wait patiently for those patterns to complete. The market will offer you for sure nice opportunities to trade. You don't need to wait for a single opportunity to trade. The market will offer you other opportunities. You need to keep constantly searching for those events. If you need to wait 1 week for one trade setup to develop and to form, or for a pattern to complete, you wait for it. In the meanwhile, you'll search other pairs and other instruments to trade other patterns. So this is euro versus the New Zealand. Then the cable, or the pound versus Australian dollar. I saw these as a potential heads and shoulders formation. Actually, I'm seeing these as a potential heads and shoulders formation. Obviously, what will trigger the pattern? A violation below the weekly support. So breaking below the weekly support may trigger more bearish momentum for the pair. 200% Fibonacci extension is the default projection below the next zone. So we have a next zone there, and breaking below that next zone eventually will trigger more bearish momentum for pound versus Australian dollar. And the 200% Fibonacci extension is the default projection for that pattern. We never know if the price will search for those levels. I'm sorry. Now, as you can see, we are now threatening the monthly fractal resistance, and recovering that fractal may trigger also more bearish momentum. Let's wait and see. Above, the market has failed just by a few points the bearish crab pattern at 196.96. So this was the projection for the bearish crab pattern, and nothing assures the market will actually trade higher from here without breaking below this fractal support, and eventually will reinforce this parallel structure at some point, and we'll search for that completion point eventually. But at this point, nothing is granted and nothing is pointing for that to happen, unless obviously the market breaks above the daily fractal, and breaking above that fractal will also increase the probability to retest the previous resistance and the previous highs, and eventually that will also increase the probabilities to form those patterns above. For now, I'm focused on the possibility to break below the weekly support and the daily fractal support, because that may trigger, and that will trigger the edge and shoulders formation with default targets below, or at least reinforcing these ascending trend line support for this parallel structure. Then cable versus the New Zealand. Bullish bat pattern printed at 88% fib. I'm waiting for my chart here. 88% Fibonacci retracement. As we can see, the market has nailed that Fibonacci, and it has started it has bounced from those levels. Actually, let me increase again my time frame. I projected that pattern at 88% fib. The market has respected that level, respected the previous structural lows from these previous structural supports, but it has failed, at least until now, it has failed just by a few points at 38% Fibonacci retracement. So I will not say the market will trade there, because, and again, I never get tired to repeat this, nothing is granted, but based on the structure that we have and the most recent price action that we have, I will not be surprised to see a new high for cable versus New Zealand at 38% fib, and eventually searching for other fib levels between the 50% and the golden fib. So we have the first target and the second target at the golden fib, so for that bat pattern. So I will be very, very surprised to see the market reacting well and failing the target. Usually when the bat pattern starts to work, they will put the price trading at least a 38% fib. I will not say the market tends to trade the second target at 61.8 Fibonacci retracement, but at least the 38% fib is the minimum expectation when we see the pattern starting to work in our favor or accordingly. Again, breaking below the weekly and daily fractals, we have the alt bat pattern at 191.49 and 186.40. The price, actually we have nice convergence or nice confluence between the golden Fibonacci retracement and the 113% fib for the alt bat pattern, and we have also perfect convergence or confluence between the 88 and the 168 extension. The 168 extension is also the crab pattern projected, the bullish crab pattern projected there. So I will not be surprised also with the completion of the three patterns: the bullish bat pattern, a bounce, a fall into the 113% fib, and a bounce to the 38% Fibonacci retracement if that happens. So we will see the price again trading, bouncing from the 113% fib, searching for the 38% Fibonacci retracement. And if that fails, we will see, or eventually they will complete actually all those patterns between the 88, 113 and 168 extension, not the first time. If that happens, we will see how the market will react, but considering the default and minimum expectation at 38% FIB, I will not be surprised to see that major recover for the pound versus New Zealand. At least for now, we pay attention. We stay paying attention. We keep paying attention to those levels. The 30, actually not this one, 38% fee right above the daily fractal. So I will not be surprised to see that happen. Now let's go into the DXY. The DXY is also actually it's starting to react accordingly to the pattern that we have found. So I shared this pattern among our communities on socials also. So this is a bearish bat pattern, the default 88% Fibonacci retracement, 97.65, 56, 38% Fibonacci. There, I still believe there's at least the market is reacting from there. So 88% FIB, I expect a minimum of a 38% Fibonacci retracement, 50% in the golden FIB as a second target. So, but at least a 38% FIB, and let's see how the market will react from this daily fractal resistance. It's now a support level. Let's wait and see. Please ignore those fractals and some of those charts because I had no time to update them at this point. I need to update all those levels, but sometimes it makes more sense not to update them because we will plot the previous structure support and resistance levels, fractal levels. It's always interesting. Now, for the metals, I have only one thing to say, and not regarding the gold chart, but actually the silver chart. I will ignore for now the gold chart because I have nothing specifically to say to that chart. Well, first of all, 113% Fibonacci from this swing high. So we are rejecting an extension of this swing. So this retracement, this pullback extended below. So the 113% Fibonacci extension is the level that I use to identify the potential false breakouts. So we have a previous structural lows, and let's push back the price here, and let me try to zoom into 2 hours time frame charts. Let's try to see if that will help. Okay. No, there's something wrong here. Why the market is already trading the 113% FIB? No, there's something wrong here. There's something wrong. Actually, there's nothing wrong. Actually, there's nothing wrong. Actually, we need to wait for. No, let me go again. It's something confusing here. Somehow those my trading view charts. I need to delete this line here. I don't know why I have those lines here. Let me try to plot these again. Let me measure these again. Actually, let me see one thing on gold, because eventually I'm confusing with something that I saw on gold, and I believe it was exactly that. Let me just measure where gold has found some support here. I need to measure this extension. 113% fib, exactly. So yeah, it was my fault, my confusion. Gold is trading the 113% fib from this very last swing high, so this retracement here extended below, and that can trigger, obviously, breaking above this fractal, breaking above this resistance will trigger more bullish momentum for gold, for the precious. And if that happens, we will see the development and the formation of these eventually bearish sharp patterns between the 161 and the 224% fib. But again, we need to wait for the breakout of this structural resistance there. And the reason why I have nothing to say regarding gold is because it's a little bit different from the silver price structure. At least it has been more constructive, in my opinion. So that being said, let me push again my Fibonacci extension tool and let me adjust this trend line resistance here. So we have the price there. We have here a resistance trend line broken. The market has recovered the daily fractal support from this low, so we have a previous structural low and a new lower low, and the price has recovered above this daily fractal. So I assume the market will search for higher territory, for higher prices from there. Let me also push my extension tool, 113, 127, and again, very similar as gold, we have silver, it has found some pressure between the 113 and the 127 extension. So that being said, an extension to the 168 extension, or an extension to the 168, will put the price trading at 1844. So this is the next pressure level that I will pay attention on for silver if that happens. I'm bullish on silver as soon as the market starts to find some of these pressure elements from between these major trend line supports and these virtual, I call it a virtual because sometimes it makes no sense to plot those trend lines, but this trend line covering those highs extended, and we can see the price finding some support or finding some pressure level at those price zones. We have also, as I mentioned before, this ascending trend line support nailed and reinforced by the new 4 hours fractal at 1768. So obviously trading below the 1768 may trigger more bearish momentum for silver. And obviously we have on a 4 hours time frame, I believe, I've plotted this, I've already projected patterns below. If that happens, what will happen next? So in what levels I will search for potential pressure on silver. 1738, so this is the completion point for this bullish shark pattern at 168 extension. Obviously that pattern can also complete at 224% Fibonacci extension. A retest of the weekly fractal will not be a surprise. I'm still holding my longs, not because I have a specific advanced pattern to trade, but based on price structure and price action. I decided to take some risk above this trend line. So that being said, we are also feeling, as I mentioned before, we are also trading one of the criteria that allow us to identify if the price trades above these levels, that allow us to identify potential bearish pressure zones above. Obviously, we have a lot of room to trade above these structures. Or before the price achieves those levels. Again, trading below, I will pay attention to the 168 extension, 1738, confluence with the golden fib and the weekly fractal resistance, which is now a fractal, which will act as a support, not a fractal, but will act as a support. If that happens, if the price breaks below this ascending trend line. And that completes my approach for today. I hope you enjoy these pictures. Let me just finish with S&P and the DAX. Just to finish here, we have also the DAX trading a very interesting price zone. 169 extension, the price has nailed the 1350 and the completion point. So I will expect at least the 38% fib. I need to adjust those levels just a few points here to the most recent highs. So that being said, DAX to the DAX retesting the monthly fractal resistance. I will not ignore that possibility based on the pattern that the market has forged. So that being said, we assume, based on the pattern that the market has formed, we assume the market needs to pull back to the 38% fib based on historical data for those patterns. So bearish crab pattern extended at 169 extension. So that being said, we expect a minimum of a 38% fib retracement to the monthly fractal. I can't say the same thing for S&P because we have a different, I have a different pattern there. So, and for that pattern, we need to go into a daily time frame and basically and pay attention to these previous deeper pullback. So all these pullback and the criteria that the market has offered and based on the Fibonacci levels, I tend to project a pattern at 200% Fibonacci extension from this swing. So this swing, this bearish momentum projected above. So I take my extension tool, I measure this swing low and swing high, extended above 1315. So I'm projecting this pattern since January. So since January from 2019, obviously. Once the price starts to recover above this, the 168 extension, Fibonacci extension, once the price starts to recover that fib, I started to plot or to project that pattern above. And I said before, and I said at that time, it will take a long time to achieve those levels for sure, because the market will not rally immediately to those levels. It will take a long time. And I remember as it was yesterday, saying if this was a 15 minutes time frame chart, I have no problems to assume the market will rally into the 200% fib. The problem is that this is a daily time frame and it will take a lot of time to develop and to form the pattern, usually. Obviously the market can rally and form the pattern very, very quickly, but it doesn't, it's not usual to see that same price behavior or so fast price behavior. So as we can see, almost 400 days already. The 384 days already have passed since the price starts to recover from this Fibonacci extension. So as you can see, the market taking a lot of time to approach those levels. 13, 15, 200% fib. I want to see how the price will react from those levels. Again, at this point is very annoying or tricky, in the lack of a better expression, to trade S&P or to search for bearish swings on S&P. The market is extremely heavily and trading, pushing higher. Every time the market prints a bearish pattern, it ignores the pattern, it starts to trade even higher, keeps trading even higher. So it's very tricky to trade on, or at least it's very tricky to try to identify a potential reversal for S&P. But at some point the market needs to pull back, and that's what those patterns tends to project for us: eventual pressure levels, eventual reversal pressure levels, or as a support or as a resistance. So as a resistance, we are approaching the 33.15. So this is my price for S&P for an attempt to go short. So if that happens, we will see if the market will print the so desired 10% fall. Actually, if the market decides to shift targets, we will have more than 10% fall, 11.57, 11.50% below, if that happens. So you have a motive to short S&P for 10%. You already know what to do with your limits. You don't want to lose 20% for sure. You don't want to lose the same one-to-one risk reward. You can create a scenario to trade with a better and a friendly risk reward approach, considering the pattern and considering the default targets and expectations for the target. So at the same point, we have these S&P pushing higher. We have the DAX completing this bearish crab pattern, which I will not be surprised to see working at the same time that S&P starts to move sideways or eventually into a consolidation process before trading even higher. So those are my views for the market. I hope you enjoy those patterns. As always, don't expect those patterns to work 100% of the times. They will not work every time. We need to one of the most important things that we have is the capability to identify our limits and respect our limits. Respect your own criteria, your own risk strategy to trade. You already know that we don't trade to lose more than what we expect to win. When we have a loss, we need to take in consideration a small loss, and not take those as Mark Douglas used to say, only a big loss will hurt you. So try to avoid them and try to respect your criteria and limits. And that's one of the reasons why I search for advanced pattern formations, because they offer me a default target, and based on that default target, I can manage my stops and I can manage my limits. So that being said, nothing is granted inside the market. Safe trades for all of you. All the best for you and your families, and I hope you have a nice weekend ahead and a nice trading week, the next trading week ahead. Also, I wish you all awesome trades, and be disciplined with yourself, not with your charts or not with your trading account. Be disciplined with yourself, and all the other subjects will follow. So we need to be disciplined with ourselves. Our risk strategy will be respected. Our limits for each one of our positions will be respected. And if you do that, if you repeat that as a routine process, actually, if you make that as a routine process, I can assure you that you will make money inside the market, respecting the rules, respecting your own criteria, and not being greedy. No, try to be humble with the market, and the market will reward you for sure if you know how to respect your own limits and criteria. So that being said, I hope you enjoyed this video. Thank you for being here once again. I hope you have some useful information. You take some useful information from here. You have always the possibility to contact me and I'm offering also some lessons for those who are searching for a strategy to trade. I'm offering some one-to-one approaches and one-to-one lessons to trying to share the strategy with those who have interest on harmonic trading or advanced pattern formations, but not only. We need to understand the basics before going into advanced pattern formations, and that's what I'm trying to do. I'm providing people with those lessons in order to help them to develop their own trading strategy. So that being said, once again, thank you for being here. Safe trades for all of you. All the best for you and for your families. Thank you very much.